Welcome to Breaking Bread Presents Gaps Part 2. In this session, I want to break down my favorite gap setups and the ones I will not be taking. Quick disclaimer before we begin, this video is for training purposes only. I am not a financial advisor. I'm just sharing with you the tools and ideas that I use when I day and swing trade, so you assume all risks when placing your trades. Alright, so gaps 2. Let's do a quick refresher about some of the things I spoke about in the 2 videos prior. If you haven't had a chance to watch those videos, please take time to do so. But some of the things I talked about in those videos were: what are gaps, what are gap fills, the types of gaps, treating the tops and bottoms of these gaps as support and resistance levels, and then I showed you how to use your fib tool to find the 50%, the 61.8 level of these gaps, and we use those levels as support and resistance as well. So, what are gaps? Gaps are created when a stock opens up at a significantly different price than where it closed the previous day. Now, I know it say day on this slide, but you can find gaps on any time frame, and if you do, you would treat them the same as you would a gap created on the day time frame. So, gap fills. What is a gap fill? A gap is considered to be filled when price retraces back to the level where the gap was created. Now, I know some consider the gap to be filled once price gets to the wick of the previous candle before the gap, but I technically do not consider that a gap fill. The gap hasn't filled to me until price gets past the close of the previous candle before the gap was created. So what does that look like? So here you have a gap. You see this candle down here, candle here. So there's a gap and price. So for this gap to be considered filled, price would have to come down to this 143.30 level, which is the close of this candle, or past that for me to consider this a gap fill. Now, if you know the anatomy of a candle, this is a downtrend candle. So the close is at the bottom of this candle. So price would have to get there for me to consider this gap to be closed. In this example here, price gap down. So for me to consider this gap here to be closed, price would have to come back to this close, which is 115.56, or push past it for me to consider this the gap to be closed. So you're looking for a price to get to the close of the previous candle, which is this, before the gap was created. And the same with this uptrend. This is the previous candle before this gap was created. So that's the close that you're looking for price to get back to. All right, so the type of gaps we talked about the same day gap fills, minding the gap, your gap and goes, and your gap and fades. Your same day gap fills, these are gaps created after market or pre-market, and they are filled the same day when the next session opens. You mind the gap, these are gaps that were created previously in the market, and now price is approaching to possibly fill the gap, or we're going to treat it as a level of support or resistance. Your gap and go, this is when price gaps up after market or pre-market, and it continues in its uptrend. It's the reverse for a gap and fade. This is your downtrend. This is when price is heading in the downtrend after market or pre-market, and it continues in that direction when the next session opens. Now, how do we treat these levels as support and resistance? Well, the purple areas here in these examples are your gaps. So we're treating it as support and resistance until price says otherwise. So as you can see, the bottom of this gap, price went there twice before it gave you these wicks. It started heading back in the opposite direction. So we're treating that level as the bottom of this gap as a level of resistance. Same thing down here. Price got into the gap, came back to the top of the gap, and we treated that top of the gap as a level of resistance before it headed back down to the downside. And in this example here, price got to the bottom of this gap, gave you this long wick, so that's a rejection, and starts heading back in the opposite direction. So that's how you're going to treat these gaps until price says otherwise, the tops and bottoms as support and resistance. Also showed you how to use your fib and how to use them as a support and resistance. So you can see here, my fib is connected on the gap, which is the space between these purple lines here. So you see my 50%, my 61.8. And if you look to the right, price treated that 50% as a level of resistance until price said otherwise. What do I mean by that? Price breaking through, and this is no longer a level of resistance. It's going to act as a level of support. So until price says otherwise, you treat your fib levels as a level of support and resistance, depending on which way you're playing. And if you look here to the right, you'll see where price reacted at. This is the opportunity for you to take some profits if you would like. You don't have to, but that's what I do. Once price gets to the 50% of the gap, I'll look to shave some profits there, just in case it wants to come all the way back out this gap. All right, so if I see a gap play, and this is what I see on the chart, one of these setups, then I'm taking it every time. So did price gap up or below a previous level of support and resistance? Is this the price first time visiting this gap? Did price run into a previous level of support and resistance? That's more so same day gap fills, but I'm going to show you an example of that. So previous level of support and resistance. If you look to the left, you see how many times price came to this green line, which is a level of resistance, before the market gave it a push up. So once I see price gap above or below, depending on which way you're playing, a strong level of support and resistance, I'm going to play it for a continuation to the upside or the downside, again, depending on which way price is going. But you see, if you look to the left, this was a strong area of resistance. So once price gave it that boost, then I'm trusting this to continue to the upside. Also, if it's not the first time price getting to a gap, then I will trust this play to the upside. As you can see here, price got here the first time, and now this is the second time. So if it's not the first time, then I would trust this play to the upside. A previous level of support and resistance. So this is more so same day gap fill plays. But if I look at aftermarket or pre-market and I see something has gapped up or gapped down, I want to see if it's ran into a level of support or resistance. So as you can see here, price got to this level of resistance and then started heading back up in the opposite direction to fill this gap. Do I know that price is going to fill this gap? No, I do not. But I do know it's coming off of a strong area of support, so I'm going to trust it to the upside until price says otherwise. In this example, price didn't even touch the level of resistance that's up there. So you see it reached, but it didn't touch it. So I would trust this to the downside to fill this gap that was created pre-market. Do I know it's going to fill this whole gap? Nope. But this is when I'll put my fib on here, play it to the 50% level, and play what price is telling me until it says otherwise. I'm going to trust this to the downside. The only gap play that I am not taking is if it's the first time price has approached this gap. You can see here, price, this is the first time price got to the bottom of this gap. So I'm not playing it. Not saying you can't, because you definitely can. It could possibly go and continue and fill this gap. It definitely can do that. But for me, I'm not taking it. I want to see some type of retracement before I want to take this play back to the upside or downside, depending on which way the gap is, for me to take it. I want some type of retracement, price going to get some gas, fueling up, and we're going to head back and attack this gap. So that's what I look for. But again, do what you feel. I'm not telling you what to do. I'll never tell you what to do. But for me, I'm not taking it the first go around. I'll wait until the second go around. If it goes and fills it, then it just goes and fills it and I missed it. Oh well, it's always another play. But I'm not taking it the first time. Some things that you should also consider is the ATR of the ticker. So let's say you have a gap that's $5 in range. ATR on the ticker is $1. It's a high probability that that ticker is going to get exhausted within that gap. So you want to keep that in mind. It might not fill that whole gap. Not saying it can't, because the market does what the market wants to do, but you want to keep in mind that it might exhaust itself at that ATR of $1. Now, if it's their earnings, we all know for earning plays, tickers can sometimes run double, triple, quadruple more than its ATR. But if it's just a normal day and we're approaching a gap, then keep in mind of that ATR, because it might not fill it that same day. Also, you want to be mindful of the time of day that price is approaching the gap. If it's the back end of the day, meaning the last hour, 2 hour, and price is approaching gap, I wouldn't trust that. I would treat that as a supporting level, and maybe price will bounce and reject back to the opposite direction. Now, if it's the start of day at opening, then I would trust that gap play. But if it's the backside of the day, I'm not trusting that. I'm not trusting that play. And then the flow of the overall market. So I want to find gaps that is flowing with the overall market. So the NASDAQ is running up, ES is running up, then I'm going to trust that play to the upside. If NASDAQ is running down and ES is running down, then I'm going to trust that play to the downside. So I just want to go with the flow of the market. Not saying that tickers can't go opposite of ES and NQ. It definitely can, but I just like to go with the flow of it, not against it. All right, so some quick tips before we get out of here. The gap has not closed until price gets past the closing price of the last candle before the gap was created. Remember, it's not wick to wick. You want price to get to the level or past the level of the previous candle before the gap was created. You want to get to the closing of that candle. And also you want to look to the left. You need to look to the left to find these previous levels of support and resistance. Also, did price gap up or down to a previous level of support and resistance? So after market or pre-market, look to see where a price gap to. Did we run into the wall? Or did we gap above a wall? Like, you want to know this stuff. If you see it ran into a wall, then play it for a same day gap fill. Also, using your fibs to measure the gap. You want that 50% and the 61.8 level of that gap. You want to use those levels as support and resistance, and also as some take profit areas if you want to. Totally up to you. But make sure you're placing that fib on there and finding that 50% and that 61.8 area. Also, the ATR. Like I said earlier, you want to be mindful of the ATR. If it's just a regular day and price gapped up or down, then you should be concerned about that ATR. If the gap is $5 in range and the ATR is only $1 or $2, then play it to $1 or $2 and see what price does at that $1 or $2. Is it exhausted or is it still pushing? If it's still pushing, then keep playing it. But play what you see. And then also find a setup that's going with the overall flow of the market. Like I said, I like to go with the flow, not against it. So I want to find a gap place that's flowing up if the market is flowing up. Or I want to find a gap place if the market is flowing down. Then I want to find a gap place that's flowing down. All right, so we have come to the end of this session. I hope the information in this video will assist you in some way along your trading journey. If you have any questions or comments, feel free to drop them in my DM, or in the comment section below. Until next time, I thank you for breaking bread with me. You all stay blessed.